Just want to do an update on the 10-year yield and the dollar from the last video I did here about a week ago. And so what I'm seeing here is that we're starting a fourth wave here on the monthly, it looks like. Looks like we topped out on this third wave around here at 3.2 or so. And we're all the way back down here at 2.84. I'm looking for 2.71 to 2.5. And this is pretty interesting too, if you think about it. With Powell going to raise rates in June or July, with interest rate raises, yields usually go higher. And so it looks like we're doing a 1, 2, 3. We're doing the fourth wave now. So maybe we'll stay down here through the end of May, maybe early June. And then when Powell decides to raise interest, or when they raise interest rates here in June or July, we can get this fifth wave here, or start this fifth wave, which could potentially take us to about 4.15 to 4.5. Then again, I feel like the Federal Reserve and Powell are they might go into it with the intention of raising rates, and then they might, they might only do 1 or 2 more raises, and then they change their mind, and that might actually work out perfectly with the chart, because we're getting the 1, 2, 3. We're getting the fourth wave right now, and then we get the raises. Maybe get something up in here, all the way up to 4.15, and then they reverse course. And as they see that it's not really doing as much for inflation, and the market is crashing, then they reverse course, and we get a move back down into here. And so I was just thinking about potential scenarios, and this is actually working out almost perfect for that scenario. Falling into Powell, and then we'll get a move up here for raising interest rates, and then if they reverse course, a move down to here. So that's pretty interesting. And then the dollar also looks like it's starting the fourth wave down here, which I said would probably be like 101.50, and then we get a move up here to 106 to 110. And so let's say we do get the dollar move and we get the yields going up at the same time. That should be pretty bearish, I would think. Usually when yields rise, you think of money going back into the market. But with the dollar also going up that high, I think it's going to be pretty bearish. And that's kind of what I'm expecting with the overall market as well. If you look at right here, like I have this laid out, this move right here, it makes a little bit of a sense because the yields are falling, but I still am looking for that C move up here for the overall B wave. We haven't gotten that yet, but as you can see with the bottom here, unless this is not the bottom, unless we have more to go down, but I still think regardless of what happens right here, I think we're still going to go down here to at least 367. If you zoom out on the chart, if we have the overall fourth wave for this since whenever the S&P came into play on the charts, we would have a 50% retracement would be at 350 actually. So let's say that this is a first wave move right here, and we're just doing a second wave move now. That means 349 all the way down to 318 would be a good area to look at for an entry, and not out of the question if this is a second wave. We thought all along this is going to be a fourth wave, but it's looking more and more likely that it is actually a second wave, and this was just a gigantic first wave. So a lot of factors in play, and then you also got to think about when we finish this 106 to 110 move on the DXY, the next move, that would complete the 14-year cycle from March of 2008 all the way up to whenever we complete it. Let's say we complete this in, I would say a good aim would maybe be like August or September. I'm thinking we might be kind of bearish until then, or maybe we start recovering in August or so. So if we get that and we start moving down in the dollar to the 80s, 87 to 83, And you think about when Trump came to office, that was, let's see, that was 2016. We went from 100 straight down to 90. And the market put on a gain of, I think it was 40%. Let me look exactly what this is. He came in December of 2016. Or no, I'm sorry, January 2016. Where was this at? Yeah, we went from, I initially sold off, and then we went straight up in, let's say in 2 years, we went up about 40%. And so the dollar during that time period too went from, well, went all the way up to 103, all the way down to 88, and we went up 40%. So from there to there, that's 40%. So what do you think is going to happen if we go to 106 to 110 and then all the way down to here? And I don't know. I'm kind of thinking the timing. The timing is obviously the hardest aspect to figure out. As this, this first wave, this is an overall first wave, took 14 years. So a second wave, the crash could not come, maybe not come as quickly as people think. It could be 2 or 3 years down the line. And people will say that's crazy, but we could have first wave, second wave, third wave, fourth wave, fifth wave, and it could take another, this is from 2020, and this is only the second wave. We could have another 3 or 4 years while the dollar is selling off and before the market actually crashes for good, like an 80% crash. Like we finished the whole SPY move for years and decades. So just want to keep you guys eye on that. Look for the dollar to be topping out here maybe in the next 3 or 4 months. Hopefully, I would think. And then I would look for yields to be rising when Powell raises rates here in the next month or two. So if you look into these and play around with them, you can kind of get an idea of what's going to happen. Another thing that I wanted to mention too is I think that growth stocks on this fourth wave are getting a little bit of relief, but I think that they're going to be under pressure big time again once we get this move up here, and then the dollar goes up one more time too. They're going to be even under pressure more than they were before. So I think this is a short-lived bounce for them, maybe another week or two, and then they're going to be straight up. They're going to be going down again. So that's just my thoughts on how they're all interacting, and you can take what I said and play it however you think the best way to do it is. And I'll try to give an update here maybe next week or so and try to do like a weekly update on all these different factors and maybe add in the VIX there sometime as well. So let me know what you think in the comments, and make sure you like and subscribe so I can continue to grow the channel and make more videos. And I'll probably do some growth stocks and overall market Elliott Wave videos here later in the day.